Welcome to Your Money with Leo Daprile. I'm Leo Daprile, and each week on AM 570, Dan Rivers and I will talk about anything and everything to do with your money. If you ever have questions, please feel free to call me at 330-533-6936, or you can email me at leo@gemyoung.com. Enjoy the show.
This episode of Your Money with Leo Daprile is sponsored by Grange Insurance.
Time now for Your Money, brought to you by Gem Young Wealth Advisors, a family business that does business with individuals and families that need comprehensive risk management for their wealth and assets. And our guest is Leo Daprile from Gem Young Wealth Advisors. They're in Canfield, great company, and you'll enjoy doing business with them. Good morning, Leo.
Good morning, Dan. How are you today?
I am good. We're looking at some index funds here this morning, and let's talk about the Russell 2000 index. First of all, what is the Russell?
It's just another index of small, in this particular case, of measuring small cap stocks. You know, when we look at how we break out stocks, in general terms, we'll look at small, mid, large cap stocks, international stocks, and there's different indices that track those. And we use a lot of those different indices when it comes to building portfolios and having different allocations and where your money goes, because you don't want all your eggs in one basket. For instance, when you talk about the Dow Jones Industrial Average, you know that's only 30 stocks. That's would be a highly concentrated portfolio, and it doesn't lack enough diversification. So when we're building portfolios, knowing what each of these indices are doing in terms of the size of the stocks that we're following is very important.
All right. So the Russell 2000, and what kind of growth have they had this year?
It's been amazing, quite frankly, Dan. They're up over 15% this year, the small cap stocks, and where that's important. And the reason that's important is typically when we go through a market correction, like we did this past March, is the small cap stocks always take the brunt of it first. In other words, if you think of it in terms of the weakest ones always take the biggest hit at first, and the strongest ones are always the ones that feel it at the end. Through 2000 and 2020, what was important is a lot of the big companies, as we know and we've talked about, did pretty well, but the small caps did not. And a lot of it had to do with a lot of fear with the pandemic with these small companies. Would they be able to survive the pandemic? Would they be able to build up what they lost? Were they going to lag the market? So there was a great deal of uncertainty surrounding what small cap stocks would do and where they would behave. What's interesting is when we decided on this topic for the show today, there was an interesting article in the Wall Street Journal this morning about how manufacturing in the United States simply can't keep up with demand right now. And a lot of that has to do with these, and where that's important in the world we live in today, where we live in what, like you've heard me say before, the right now economy. We don't build anything till we need it right now. You know, we have this whole supply chain, and that whole supply chain through 2020 was disrupted because of people canceling orders and then people coming back in to reorder what they canceled. Well, with that supply chain being so thin, there wasn't a lot of inventory for them to make up. So this is actually becoming a boon for the small cap companies in America, especially since Biden got in. So now that the supply chain is trying to backfill, if you will, and catch up with demand, and I think they're going to be doing that through a lot of 2020. A lot of managers are seeing that there's potential for significant growth in a lot of these small caps, and that's what's been bidding up the stock price.
Let me break it down to something real easy to understand. Sunday, we bought 3 2x4s by 8. They were $6 each. Last year, you could buy those 2x4s for $2 each. What's the story there? Why are they so much? And is it manufacturing? What's your thoughts on that?
I think it's a supply and demand. I think the manufacturing was there, but I think, again, Dan, it goes back to, if you slow this whole supply chain down by a month, the old days is everybody would have so much inventory, and the genesis for protracted recessions used to be that we had to work off all of this excess inventory, okay, which means factories weren't working until everything that they had produced prior were sold. before an economy would recover. That's where the old traditional 18-month cycle, once we got into a recession, the average cycle till we got out was 18 months. Well, we don't have those excesses in the system. So even if they stop production for a month, that's a significant disruption to the supply chain. So even though they're producing, with everybody being home, and I was reading, you're talking about 2x4s, you could say the same thing about power tools. Power tools are in short supply for the same reason. People decided to stay at home and rebuild things or build new things, so they really just increased the supply, which is giving a great opportunity for manufacturers to raise prices.
So just to feed that back into layman's terms, what you're saying is that we have a higher demand because people are staying home and they're doing home improvement projects and maybe building homes to replace some of the homes that have been torn down. Then, in addition to that, you had companies that couldn't produce at full capacity due to COVID.
That's correct. That's
All
exactly
right,
what I'm
very
saying.
good. So let's understand. Now, when does that catch up?
I think it's going to take most of 2020, in my opinion, to catch up, because from what I'm reading is a lot of the supply chains where maybe a normal supply was a month to get a product, I'm seeing where that's 3, and it's been 3 months or 6 months. So that shrinking of getting more of these raw materials into the supply chain has not abated yet. So if they're saying that today, and think about it, Dan, we're almost a full year into this pandemic when things began to shut down, and they still haven't caught up yet. So, and there's no signs of what I'm seeing of that catching up anytime quickly. You know, you bring up lumber, which is an interesting point. Lumber being up 300% the way it is, look what that's going to do to an already housing supply that needs more houses. You know, and if you're going to increase the supply of those houses or cost of those houses, it's going to get more difficult, for people to build those houses. And I think we run the risk of slowing down new house construction as a result of that.
Yeah, I mean, I would think so too. I mean, if just imagine that. I'm talking about, and I don't mean to go so much into lumber, but a 2x4x8 is a basic building block, and then if you take that up to where you need, ceiling joists and you need rafters and things like this, it even gets exponentially higher, and it's going to be impossible to build the homes for what you built them last year. I would imagine there'll be a slowdown in housing. I'm just imagining, unless they can fill this gap and these lumber companies can all of a sudden start making more and do it quickly. In any case, that's my lumber story. Just buying some 2x4s the other day, and I know other people have talked about this, but it was an eye-opener for me. These smaller companies that you talked about, the Russell 2000, these are what? Are they basically tied to the domestic economy?
Most of them are. And that's a good point. When you get to mid-size and large cap companies, how we define them, those start to become multinational corporations. In other words, they operate around the world. So they're more subject to just not what happens here in America, but they're subject to what's happening around the world. So if there's, for instance, they may have a big presence in the United States and a big presence in China, for instance, and if there's a slowdown in China, then that could dilute their earnings overall. But a lot of these smaller companies rely on just their domestic business relationships, and right now many of them just simply can't keep up. So that's why earnings are up so much. And I think as the year goes on, with what I'm seeing is a lot of these companies are going to start showing tremendous earnings. Now that I say that, Dan, here's the risk. Here's the risk that when you're up 15% 7 weeks into the year, you have to ask yourself the question, did they bid the price of these small cap stocks too high already? Are they overvalued now? So just because it's been a great opportunity for these companies to increase in value, and because it looks like a lot of them are going to be more stable, did it run too hot too fast, and is the opportunity to get in from an index perspective past this already? And I'm worried that it is. I'm worried that we've crossed over from optimism to exuberance in the small cap sector. So that's one of the things I'm watching. And again, the solution to this is making sure that you have proper diversification and that you're not just relying on an index, and you're trying to make sure you're running a portfolio that if it's using indexes, it's much more targeted, and your managers are much more active in whether or not they continue to stay in those indexes at these prices.
Yeah. One good sign on the local scene of an economy that's recovering and people have faith in, I see that Macy's is going to expand their warehousing in North Jackson. A lot of people go into Macy's and they say, I don't see anybody in there, but they must be optimistic that they are going to be able to continue their present model or change it. I've got a feeling they're probably going to change it, but it's good to see that more warehousing is coming to our area.
Well, I'll give you some additional data on this. I was watching the news channels this morning, and Fox Business reported that Macy's stock is up considerably today because they've changed their projections for 2021 because they're expecting a large increase in their online sales, which then feeds back to the distribution center in Youngstown saying, is that the reason they're putting this money into this? Because they're expecting such an increase in their online growth.
Yeah, it's really kind of hard to argue with online because sometimes you order something and you're surprised it even came earlier than they had promised. They're really getting very good at what they're doing with it. Let's talk a little bit about what you do normally. Leo Daprile is with us, and I'm a fan of his, and Leo has helped me out with my financial planning, and he'll help you. And it'll start with a fit meeting where you sit down and you and your wife or you and your husband, you go and you sit down and you meet Leo and find out what he's all about and find out if, in fact, you're right for each other. Not everybody is, but generally they hit the money pretty good. And then, Leo, after that, you build a plan for people based on their age, and especially one of the things that's hard to figure out, on their goals. That's a hard one, isn't it?
You know, I say this all the time, especially if you're in business. You're used to doing business planning all the time. But one of the things we rarely do as individuals is we do personal goal planning. We think we do. And Dan, you've gone through the process with me that and you've heard me say things where a lot of times we have ideas of what we want our goals to be, but in many cases we don't articulate specifically what that goal is. We don't really dig deep into what's really behind that goal. And it's not just, I want to retire at 65. There's a lot of the emotions that go with what your goals are in life and what's really behind them. So before we even begin the process of building a plan, and that's why it's so important, we get to know each other. And things you've heard me say, Dan, is we have to have that candid, vulnerable conversation because we have to really be able to talk deeply about the things you're wanting to accomplish and how we get there. Managing money, I always say, is the easy conversation, but it's also the last conversation we have because in many cases it could take 3 or 4 meetings till we get there, till we make sure that we understand truly what your goals are, that we really dialed in on what you're thinking, and then that becomes the genesis of how we build our plan and the basis of our relationship going forward.
All right, and you can do that just like I did with Leo Daprile at Gem Young Wealth Advisors. They do a great job, and they'll have that fit meeting like you've figured out, and then get on to the goals that you want, and hopefully you can keep your money around for a long time. Leo, if you'll give your information, I got a couple more questions.
Sure, you can call me at 330-533-6936, or you can email me at leo@gemyoung.com.
All right. And if you forget all that, simply search Gem Young and you'll find Leo. They're out there at Star Center Court and just off Tippecanoe. Now, I've been talking this morning about this fiscal stimulus and these packages out there. Is a lot of this exuberance baked into the fact that we're going to do this big stimulus with the Biden administration?
I think that's a big part of it, Dan. And, and I'm in agreement with you and that there's just way too much money being spent here. We talked a little bit about it last week that, nobody disagrees that there should be a targeted approach, but there's just so much unnecessary spending in this bill. But the fact of the matter is when you throw $1.9 trillion back into the economy, that's a lot of money that has to go somewhere. So, yeah, a lot of people are expecting that to just be a catalyst.
All right. Search Gem Young if you'd like to have Leo Daprile be your advisor. He can help you out.
Thanks for watching the video. Be sure to like, subscribe, and hit that little bell for notifications. And also make sure to connect with us on Twitter, Facebook, and LinkedIn. For all of your business news, visit businessjournaldaily.com. For all of your arts and entertainment news, go to afterhoursyoungstown.com.